whether it is those comments from Vestager about Google or these sweeping copyright rules that seem to be moving forward in the EU right now. We talk about regulatory risk and whether that's a real threat here in the U.S., but it seems like it is coming to fruition for these tech companies in Europe. How should investors think about that?
Morgan, you're right. It's a bigger issue. This has been building up for, I think, 2 or 3 years. The companies, the FANG stocks that are most in the headlines here are Google and Facebook. Google pulled off the rare trick of pissing off both chairman of the Joint Chiefs of Staff and the chief regulator in Europe. So they've obviously turned pretty tone deaf, I would argue. Look, it's an issue. I think what it probably means for investors is the multiples are going to be somewhat limited. Maybe it's a point or two, a turn or two in terms of that PE multiple that the market is willing to put on these names. It's probably down. Facebook, for example, is trading at 18 times next year's earnings. We think that can re-rate and go higher, but it probably won't safely or easily recover to that 25 level it had prior to the outbreak of Cambridge Gate and other issues. It's an issue for the names, not so much in terms of fundamentals, but in terms of the market multiple.
I want to go back to the comments you just made about Google. Sundar Pichai, the CEO of Google, in D.C. yesterday, meeting with key federal officials, including President Trump. The question there, I think, for me is what is all of that going to mean in terms of Google's aspirations longer term in a place like China?
Oh, well, I think that's what's actually gotten Google into some hot water because it looks like it's been reported that they've been involved in some of the AI developmental efforts in China, but have been unwilling to do work with some of the projects in the Pentagon. That's quite rightly raises issues for U.S. policymakers and the U.S. military. Quite rightly, it does that. So, I think if you step back, I think there's still issues that Google has in China. And I just want to, there's some context here. Google, I thought, took a highly principled stand 10 years ago and refused to be involved in censorship and took itself out of the China market, hurt its market cap, and hurt its growth potential, and did that. And it sort of seems like things have changed at Google. There seems to be a little less principle than there used to be in the past. So I think China as an end market for Google is probably de minimis, and it probably will be until there's some sort of regime change in China. Don't count on that. So that's always been an overhang on the stock. It just seems like they've somehow turned this into a bigger political issue than it really should be. They took the right principled stand 10 years ago. Something's changed at the company.
Mark, the Vestager interview was interesting to me because she seemed to be arguing that Google has changed its behavior, even though the fines don't hurt it that much. And she really sounded like she's not trying to retroactively fix the market. She's just trying to, for the future, make sure things are fairer. In a way, isn't that great news for investors that there's not some punitive perspective here as long as we take her at her word?
Yeah, I think so. Look, just in the facts on Google, I think they've clearly been pretty aggressive in some of their marketplace businesses. You go back 5 or 6 years ago, there were reviews that were taken off of Yelp and TripAdvisor and Amazon and brought over to Google. I mean, there were some clear things that were done that were clearly overly aggressive, and regulators should have stepped in. It's almost a question of mark now as to why U.S. regulators didn't do that, but European regulators did, and they seem to have had the right focus. There have been some calls in this country, in the U.S., to break up, to cause forced sales, divestitures of these companies. That, to me, seems too extreme. I know investors wouldn't want that, and it's hard to see the logical reasons to do that. Then that path in between of somehow preserving users' privacy concerns and promoting a more competitive marketplace, that seems to be the right direction for regulation. That seems like where it's going. So I don't think you'll see a dramatic change in these business models. The companies have had the trim and tack when they get regulatory pressure, and it seems to me like consumers probably benefit from that. And investors seem to have currently, there's going to be a limit again on that multiple, but it's not going to be a dramatic limit.
Mark, I was struck just by your comments just now about Google/Alphabet, just in terms of the change you've seen. I mean, we all remember when they went public. What were the first lines of the prospectus, right? Don't be evil, right? I think that was it.
Yeah.
But yes. I'm curious, we've got Lyft going public tomorrow, stressing social responsibility. Is this a real thing? Do people actually care? Do their employees care? Do their investors care? And will it continue, as you say, to potentially present a discount to the multiple they might otherwise get?
Yeah, so David, you're asking a really broad question about whether environmental, social factors are weighing more into investment decisions these days by large institutional investors, retail investors, et cetera, everybody. I think the answer is yes. So that's one of the reasons why companies are pitching themselves increasingly to investors and to users as being more environmentally, socially friendly. And then I want to be careful here. I don't think there is this blanket pressure on multiples across the group. I do look at the couple of these names where I think that the regulatory risk is probably way overstated. I think Netflix is an example of the FANG stocks that probably faces the least regulatory risk. I think Amazon actually faces relatively low risk. This is going to be a problem of defining the end market. Amazon just isn't an online retailer. They bought Whole Foods. They're building out physical store application networks. So if they're doing that, you should really look at them versus the entire retail market. And then they're 2 to 3% of total retail sales. There's no domination issue there in terms of their market. That issue really comes up with names like Facebook and with Google. Those are the ones that are really under the most regulatory pressure, and they should be.